Today is Monday, August 5th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Mike Niemiec, ADM Investor Services Grain Analyst. Alan, we're in the midst of a ramped-up U.S.-China trade tension. What relation does this have to interest rates, and how will the Federal Reserve respond?
Well, the ramped-up tensions means probably a slower global economy. This will result in the Fed increasing the pace of their rate cuts. In fact, now it looks like there's virtually a 100% probability that the Fed will be cutting again by another 25 basis points at the September meeting. And there's about an 88% chance of a third cut this year at the December meeting. So it's not just the Fed. Other central banks around the world will have to be lowering interest rates at a more accelerated pace.
I think it's apparent that the trade war is also having a negative impact on stock index futures. What is the outlook for the stock market?
Well, over the last few days, of course, we've had a lot of pressure directly due to the trade situation. So we'll probably see a lot of turmoil over the next couple of weeks, maybe some additional downside pressure, but I think it won't be excessive. Ultimately, it'll be the Fed that rescues this market with lower interest rates, as it has every other single time in the last 10 years or more when there was a geopolitical problem, including trade issues. Stock index futures fell, interest rates declined to one degree or another, or there was pressure for lower rates. So that'll be the case again this time. Some pressure near term, lower rates. Ultimately, the bull market will regain its footing and we'll see some better prices down the road.
Finally, Alan, what are the best financial markets to be long right now?
Right now, it's the gold and the interest rate futures markets, especially the bonds. Now, the gold just made its highest level advance in 6 years. The bonds at its highest level since November 2016. So these markets are positively affected by lower interest rates, but they have the added benefit of flight to quality buying. So the two markets I like the most and have liked the most recently, the interest rate futures markets, especially the bonds, and the gold market.
Let's turn toward the grain markets. Mike, we've seen some much weaker prices of late, including slightly weaker trade this morning. What are the lead factors influencing the grains?
Okay. So picking up on what Alan was saying, just in general, the overall environment as far as what's been going on with the trade talks between the U.S. and the Chinese hasn't come to any fruition. So I think that's taken a little bit of enthusiasm out of the marketplace. I would also say that as far as the weather goes, it hasn't been, it'd be controversial as far as maybe if you think it's good or bad, but it hasn't been in flaring. In other words, a hot dome over the whole growing season and or no lack of rain. So that's also been kind of taking a little bit of edge off the top. And I also have to say the money flow. The money flow has also been seeing people that since May that maybe thought there would be some fruition with the trade talks and or a weather problem are now liquidating their positions in the corn and in the soft red winter wheat, and they're adding into the soybean complex. So you got the money flow, you got the weather, and you got the trade talks that have been basically capping the marketplace and having no fruition on the upside.
And you talked about the funds and their positions in the market right now. When you say they're coming out of grains, you mean they're coming out of the long side of corn, and in the soybeans they're adding to shorts? Is that?
They were always net short the soybean complex, and they're adding to that. Maybe the tune I got written down here, like in the neighborhood of around 74,000 beans right now, 44 in meal, and 29,000 in soybean oil. I will say this, that I think that the meal versus the soybean oil is a very good trade going forward in here. I never can recall the last time I seen where trade was more net short the meal than they were the soybean oil. But anyway, as far as the soft red winter wheat and the corn goes, they went from a sizable net short position in the corn to net long. And the problem with the corn market right now is that unknowns what's going to go on with the acres, we don't have any demand. And Argentina, Brazil, Ukraine are all undercutting us, and therefore 375-ish could be a downside target for corn just to try and get competitive and get some business.
Thank you both. Remember, the views and opinions expressed today in this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.